Everyone always says you need to invest and put your money to work, but no one ever tells you what specifically you should be investing in. Especially right now with the stock market at an all-time high and talk of an AI bubble, it's hard to know what is the right move. I was scared too when I first started investing, but as someone who went from six-figure debt to millionaire by 35, I realized firsthand that investing isn't just for the rich, it's actually how you get rich. So in this video, I'll share with you the 5 investments that made me a millionaire. And I also have dozens of success stories from people all around the world who reached 6- and 7-figure net worths following my advice. So this didn't just work for me, you can do this too. Investment number 1 is going to surprise you. And you were probably expecting me to say something like stocks or real estate. And don't worry, we'll get into those investments too, including the one that made me over $70,000 completely passively. But when I started out $100,000 in debt, I didn't have a lot of money to invest. That's why the first investment that got me to $1 million was investing in myself, learning valuable skills that would enable me to bring in a lot more income. Most people only think about investing in financial capital like stocks and bonds or physical capital, real estate, gold, commodities. But there's a third type of capital that not enough people talk about, which is human capital, your skills and your earning power. When you're first starting out, investing in human capital gives you the highest returns by far because of the multiplier effect. You invest $1,000 in a course that teaches you a high income skill. That skill allows you to bring in an extra $10,000 a year. Over the course of 30 years, that's an extra $300,000 in income. You invest that in the stock market at 10% returns, that becomes $1.6 million. That $1,000 course gave you a 164,000% return. So one skill unlocks higher income unlocks more investing, and more investing unlocks wealth. That's the multiplier effect. Now compare that to just putting that $1,000 straight into the stock market and just making a 10% return. From age 27 to 32, I have invested at least $20,000 into various courses, masterminds, coaches, workshops to learn leadership, to learn communication and business skills. Now, did every course work? No, I definitely wasted some money on stuff that I ended up never using. But hey, every investment involves some degree of risk, right? But here's the thing. The investments that I made that did work actually paid for all the ones that didn't. The return on investment on skills is so high that you only need 1 out of 3 of those courses to work. And in that period, my income skyrocketed from $5,000 a month to $50,000 a month. If you never invest because you don't have money, then you'll continue to never have money. Investing in your own human capital first is how you break that cycle. So it all starts with that first investment in you. If you are making less than $100,000 a year, I want you to prioritize investing in your skills. Pick one skill, that you are interested in, because let's be honest, it's gonna suck if you have to do something every day that you absolutely hate. 2, something that you can master in about 90 days of focused effort. And 3, something that people pay really good money for. Again, we're looking for high income skills. So we're talking things like AI automation, conversion copywriting, social media management, video editing, coaching and consulting, and sales. Invest your money into programs and mentors who've already succeeded in this and can shortcut the learning curve for you. Get to $100,000 as fast as possible. And then once you're making more than $100,000 a year, now you can get aggressive about investing into some of these other investments that I'm about to share with you. Which brings me to investment number 2. So you've invested in yourself, you're bringing in a high income. Now you need to grow that money and also protect it from inflation. We all know that groceries that used to cost $300 a month now cost $500 a month. Rent that used to be $1,300 a month is now $2,000 a month. Money sitting in the bank loses value every year because the purchasing power of the dollar keeps going down. That is inflation. But when you invest in stocks, your money is growing at a pace faster than inflation. Anyone who invested in stocks has steadily outpaced inflation by 7% a year on average. So regardless of whether you're an investor or not, of course, inflation affects you because prices are still more expensive for you, but you don't feel the pinch as much because your stock investments made you so much money. Now, stocks make you money in 2 ways. The first way is capital gains. This is when you buy a stock at $50 and sell it later for $200. That's a $150 capital gain. The second way stocks make money is through dividends, because when you buy a stock, you're actually buying a little piece of ownership in an actual company, which means when the company makes profits, as a partial owner, you get a small proportional share of those profits. That's what you call dividends, and they usually get paid quarterly. Now, I love dividends. They are the most passive form of income you will ever find on the planet. But what I do with them is rather than pulling them out to spend, I actually keep them in my account and reinvest them automatically. What this does is it compounds your money even more, because not only the capital gains, but also the dividends are continually being reinvested. This is why an investment in the stock market compounds. In other words, money making money on your money. And this is why investing just $20 a day could turn into $1.2 million in 30 years. So long story short, whenever I had any money to spare after investing in myself, paying my bills, paying off my debts, I always put money into stocks. I did this every single month via a strategy called dollar cost averaging. Check out this video here for more info on that. Now, most people, when they hear stocks, they think of investing in things like Nvidia or Apple or trying to pick out the next Amazon. But that kind of investing is very risky for beginners. When you put all your money into one or just a handful of stocks, you risk losing all your money. Just like the thousands of people who lost their life savings in Enron back in 2001, or when Kodak went bankrupt in 2011 because they failed to keep up with all the innovation happening with digital cameras. Obviously, it would be great if you could pick the next Nvidia and 10x your money, but that kind of investing takes a lot of deep industry expertise, research, and yes, some luck. That's why my preferred way of investing is in what you call index funds. An index fund is basically a collection or a basket of stocks. They often have hundreds and sometimes even thousands of different stocks in that one index fund. So instead of putting all your money into one company, you're buying hundreds, if not thousands, of little pieces of ownership in many, many different types of companies. Think of it like this. You go to a restaurant and you order one big entree as your entire meal. Well, what if that meal isn't good? You've just wasted all your money, right? Or you could also get the appetizer sampler platter, which has 10, 20 different little dishes like tapas, appetizers. And this gives you a little taste of everything on the menu. That way, if you don't like a few things, no big deal because there's all these other yummy things on the platter. An index fund works the same way. If one company doesn't do well, no problem because you've got hundreds of other companies in that index fund. This is called diversification, and it is the secret sauce that makes investing way less scary and frankly, kind of a no-brainer. So although I've dabbled with individual stocks here and there with mixed results, my most successful stock investments have been in just these two index funds. The first is VTI, the Vanguard Total Stock Market Index Fund, which has over 3,500 companies. So basically, by buying this fund, you get exposure to pretty much every major company in the US. When you own every company in the US, you essentially own a cross-section of the entire US economy. And given how the US economy has performed over the last century, you can see why this has been a good investment. Something else I like about this fund is that it has a very low expense ratio, which is that tiny percentage fee that they take off the top of your investment. Always want to keep your fees below 0.2%. A small percentage in fees might not sound like a big deal, but because fees, just like returns, compound over time, just a 1% difference in fees can actually cost you hundreds of thousands of dollars over your lifetime. The other fund that I have is VXUX, Vanguard Total International Stock Index Fund. Because we live in a big, beautiful world where the US is not just the center of the universe, this fund gives you international exposure to places in Europe, Asia, and emerging markets like in the Middle East and in Latin America. Now, if you want a comprehensive list of the exact index funds, ticker symbols, as well as tips on how much to buy of each fund, if you want all of that laid out for you, grab a copy of my free Ultimate Index Fund cheat sheet. You can scan the QR code or check out the link in the description. Next up is real estate. We have all heard this before, how rich people love investing in real estate, that real estate builds wealth, passive income. But the thing is, most of us don't have $200,000 sitting around for a down payment, right? Not to mention, real estate is not so great for beginners because when something goes wrong, it can be very, very expensive. Just ask me about the time that a car crashed into one of my rental properties. Yeah, that whole mess took 13 months to clean up. So no matter what they tell you, investing in real estate really isn't as passive or as safe as you might think. However, that doesn't mean you can't do it. Long before I had enough money to buy property, I was already investing in real estate through REITs, real estate investment trusts. REITs are basically a company that owns a lot of real estate. REITs can hold apartment complexes, shopping malls, office buildings, medical buildings, warehouses, data centers. For any type of real estate under the sun, there are REITs that buy these properties, and you can essentially own those properties by investing in these REITs. You can think of REITs as basically real estate stocks, shares of ownership in companies that own real estate. What I love about REITs is that they are required to pay 90% of their income, the rental income, out to you in the form of dividends. Now, that's how you get passive rental income without the trouble of being a landlord. I get dividends from my REITs every single quarter, and compared to the monthly rental income deposits I get from my rental properties, these REIT dividends are some of the easiest money that I make. I mainly hold two REITs. One is VNQ, which is the Vanguard Real Estate Index Fund, and this primarily holds US properties, a lot of different types of properties, and this gives me a lot of peace of mind because I'm not overly invested into one region of the US or one type of real estate. The other fund that I like to hold is VNQI, which is the international version of VNQ. It's kind of cool to think that through this one REIT, you can own a little piece of ownership in like the Mitsubishi buildings in Japan and the Vonovia buildings in Germany and a little piece of real estate all over the world. Because guys, this is how the rich do it. Be an owner, not a consumer. That's why you have to invest, and that's how investing makes you a millionaire. All right, moving on to investment number 4. So far, we've talked about investments that made me a lot of money. But a key part to becoming a millionaire isn't just making a lot of money, it's also keeping the money that you make. As billionaire investor Warren Buffett said, rule number 1, don't lose money. Rule number 2, never forget rule 1. It's human nature to get greedy and start chasing a lot of money, but you also have to think about your downside. Millionaires, they think about their downside. So that's where bonds come in. Whereas with stocks, you're owning a piece of company, and when that company does well, you make a lot of money. With bonds, you're just lending money to companies in return for interest payments. So because you're lending money, it's a lot safer because your upside is capped. You don't get any share of the profit. They just have to pay you every single month with interest. And usually that loan is collateralized, meaning in a bankruptcy situation, you'll probably get your money back because the company can sell off their buildings, their machines, their factories, their intellectual property, and make sure that you as a lender get your money back. So bonds, while they won't 10x your money, they're not sexy. When the stock market crashes, bonds usually stay very stable because everyone is running away from stocks and into something safe like bonds. That is why I invest 10% of my money into bonds, not to get rich, but to stay rich and to protect my money when everything goes sideways. As for how to invest in bonds, same thing as stocks. It's better to buy the whole sampler platter rather than one big entree, which is why I invest in bond index funds rather than individual bonds. And the funds that I hold are VGIT and VGSH. There are many other types of bond funds to choose from, so again, check out my ultimate index fund cheat sheet for a breakdown as well as some advice on how to pick the best one for you. And now for the 5th investment that made me a millionaire. This is what I call the moonshot. Something high risk, high reward. Something that could 10x but also maybe tank. Basically, it's like a lottery ticket. Most people handle this completely wrong. They either go all in on something big because, again, human nature tends to be greedy, and then they lose everything. Or because it's also human nature to be fearful, they avoid risk completely and lose out on massive upside. In recent times, the best moonshot investment by far has been cryptocurrency. And specifically, I'm talking about Bitcoin. In 2020, Bitcoin was at $10,000. And by 2021, $60,000. That's a 6x return in 1 year. This is what I call a moonshot investment. But plenty of people also lost their life savings by chasing random coins. So here's the smart way to invest in moonshots. Only invest a small allocation. I've never held more than 5% of my money in cryptocurrency, and most of it has always been in Bitcoin. The logic there is that 5% isn't enough to ruin me if it all crashes, but it's enough to capture serious upside if Bitcoin goes up a lot more, as many experts are predicting. Think about it. Just a $10,000 tiny slice investment in Bitcoin, if that goes up by 10x, that becomes $100,000. That could be enough to do a down payment on a house, pay off your debt. That's pretty life-changing money. So that's how millionaires think about high-risk investments. You want to make small bets with asymmetrical upside. As central banks keep printing massive amounts of money, more and more people are starting to lose faith in fiat currency, in paper money, as a good store of value, and they're turning to cryptocurrencies like Bitcoin instead. Why? Because Bitcoin has a fixed supply. Governments can't devalue it by just printing more of it out of thin air like they do with dollars. That's why it's called digital gold. And although cryptocurrency used to be a wild, wild west, Bitcoin has been around the longest, and even traditional wealth management firms like Morgan Stanley and Bank of America are now advising their clients to put up to 4% of their assets into digital assets. I would say the safest ways to buy are use an app like Coinbase, which is kind of like the cryptocurrency version of Fidelity and Vanguard. It's regulated. It's one of the crypto brokerages that have been around the longest. Or to use your regular brokerage account like at Fidelity and Vanguard and put your money into a Bitcoin ETF, which is essentially buying a stock that owns a lot of Bitcoin. All of these investments that we talked about, you can get started with any one of them for as little as $100. And every single one of them played a part in helping me become a millionaire. So really, just pick your poison. You now have a good understanding of what investments will help you get on the path to your first million, but knowing what to do is only half the battle. The other side of it is knowing what not to do. I see beginner investors make the same mistakes over and over again, and these mistakes can cost thousands of dollars. So I made a whole video breaking that down for you next. Check that out here, and I'll see you in the next video. Bye!